Should I invest in a global index buying thousands of companies from all over the world? Or should I just buy the S&P 500, the largest 500 or so companies in America? Warren Buffett himself thinks that the S&P 500 is almost all investors need, an S&P 500 low-cost index fund. And for a long time now, he's been spot on. American dominance, the most powerful country in human history, while the rest of the world, well, just not performing at the same level. Sometimes I look at this and think, what the hell am I doing investing in a global index? Seriously. It's like, here's the winning team, world champions, never lost a game, complete dominance, and I'm just betting on the reserves. Is it time to concede and go all in on the winner? What's made a country outperform? More specifically, what has made America outperform? Its size, resources, a lack of threats on its borders due to all the military spending, its successful organization of human capital, easy access to financial capital. Combine that with an entrepreneurial culture fostered in its political capital, that great American dream as we all see in the movies. Whatever it is, the Americans did it, and they did it pretty well. But will that always be the case? Ray Dalio, who is the billionaire founder of the world's largest hedge fund, mentions that over a long enough time horizon, all things change, but that those changes also echo the past. Let's look at the changes first and how the influence of countries have changed over time. The UK, as an example, was 25% of the global stock market. It now makes up around 4%. South Africa, on the other hand, you would have to argue that it makes up 1% of the global stock market. This chart really tells so many interesting stories. How about Japan's rise here? It's sort of foreshadowing that this period looks like a bubble in the diagram, because the rise of Japan is still one of the biggest economic bubbles of all time. At its peak, land in Tokyo commanded such a premium that 1.15 square kilometers that made up the Imperial Palace was said to be worth more than all the land in the state of California. I mean, we can see how it went from there. Those that witnessed Japan's rise may have thought that it would last forever. But things change. And yes, America has grown into a global superpower. If we look at the start and end of the measured time period on a pie chart, we can see how dramatic that rise is. But what this graph demonstrates so well is the fluctuations that have occurred over this time period, and the total influence that America has had on the global market. So welcome back, and please drop a like if you enjoyed the video so far. And that brings us on to the next section. So recency bias is the tendency to favor recent events over historic ones. And recency bias leads many people to believe that what has happened most recently will continue to happen. So it is likely that after a decade of outperformance of the American markets, many would expect that to continue to happen. This table shows us the performance of the US stock markets versus the rest of the world. The orange bars are when the rest of the world outperformed the USA, and the yellower when the USA outperformed. Since 2008, we can see the USA's dominance here. But historically speaking, this stretch of American outperformance, like we've seen here, is actually quite unusual. Over the last 50 years, American markets have produced a 1% per year annual return over and above that of the international markets. 50 years of outperformance. So why are we betting on the other team? Well, whilst that stat is flattering, it fails to discuss the fact that all of the outperformance occurred in the last 8 years. Up to 2014, the US and the international markets were pretty much level. Then America just surged ahead. Studying 50 years of performance like this is a bit misleading though, because investors don't just invest at the start and then never invest again. They dollar cost average into the markets, which smooths out all the performance differences. But this perception of American dominance always and forever is just not accurate. We can see that the performance moves in cycles, moving from US to international outperformance. So, are we about to enter a period of international outperformance? Well, 2024 certainly didn't think so, as you can see a new all-time high on the S&P 500. Maybe this rapid rise in US equities last year, especially anything linked to AI, points to a problem. The US market, by historical measures, is overvalued by 35% according to Shiller's CAPE, or this adjusted price to earnings ratio. This could point to a period of relative underperformance to come as the market adjusts back to this mean. Also bear in mind that markets can stay over or undervalued for long periods of time. Back here in the 70s or 80s, where markets were undervalued, or here where the US market was overvalued by as much as 80% for a significant amount of time. This is no indication of a crash to come, more to show how expensive the US market is versus the relative value of the rest of the world at this moment. The rest of the world looks like a better deal than the American markets. But I do also think that there is a lot of merit in the argument that America will just keep on keeping on. American dominance. Every single person watching this will likely see America continue to be a world superpower and deliver solid returns for investors well past the point that it matters. There is an argument that if you buy the American markets, then you are buying the world markets anyway, due to the size and influence of the American markets. I can fully subscribe to the narrative that as emerging markets like India grow and people become wealthy in these types of countries, then companies like Apple and Alphabet will benefit, as they will sell services into these emerging markets. But if we rule out all other players, surely we're doing the world a bit of injustice. I mean, look at the success of TikTok, or the fact that the world's richest man came from South Africa. So what is the answer? I see many people at this point go, okay, well, then I'll just buy both, the S&P 500 and the global index. I just want to point out that having a 50-50 portfolio like this is actually heavily weighted towards the USA. It's around 80% USA. So by buying both, you're actually buying more of one. Remember, when you buy a global index, then you're actually putting 65% of all your money into America anyway. When I buy a global index, I'm betting on America. I'm just placing smaller bets on other parts of the world as well. I honestly think that both approaches will do well if an investor is consistent and invests for the long term. My decision to invest in both the S&P 500 and a global index isn't actually about which will provide the best returns. It's more about me and the fact that if I own a part of it, then I'm more interested in witnessing the changes over time. Please understand though that I am not a financial advisor and this isn't financial advice. I just wish to share with you what I buy because, as we all know, money is still quite a taboo topic, and I just want to be transparent with you guys. It's true that our rational brains know that a consistent, long-term approach to investing will likely produce the best returns. But our monkey brains just want to chase anything shiny that moves past our eyes. If I'm all in on the S&P 500, and in 10 years' time, America has underperformed, and we see this trend of international outperformance come back, are we all going to sit here and be like, I should change my portfolio around and fiddle with some things? Maybe a global approach removes that decision. I don't have to think about what market is doing what, or the impact of foreign exchange on my returns. I'm just simply betting on the fact that the world will keep on turning, and that the global economy long-term will keep on growing, as it has always done. But I'm okay with that because the long-term nominal average return of 8.3%, which global markets have produced, is more than enough for me to hit my financial goal. I carve off a percentage of what I invest every month for more speculative bets, cryptos, individual stocks, whatever. It just, for a bit of fun, keeps my monkey brain busy, and then it stops me from messing with the 90% of my investments that will actually likely change my life. And really, instead of stressing about where I should put my money or worrying about missing out on a percentage point here or there by not focusing all of my money on the American markets, I aim to increase my contributions to my investments through increasing my income, because I have a lot more control over that than over the changing market order of the world. So thank you for watching, and if you enjoyed the video, please like and subscribe.